What's going on, goats? My name is Raymo, and welcome back to BooKoo Bucks. Today, I'll be breaking down my trade on gold futures from yesterday because I did not record this video yesterday. So first and foremost, let me go ahead and show you my executions right here on the 1 minute time frame, and I will go ahead and break down exactly why I took this trade. So here on gold futures, this does apply to gold forex as well. It doesn't really matter. But on the 4 hour time frame, I had a bullish analysis because price was in bullish structure. This structure low to this structure high was still being maintained at the time. I went down to a lower time frame to find a 30-minute extreme order block. At least I'm pretty sure it was a 30-minute time frame. Here it is. There is that last sell to buy move at the extreme. Include that wick too, and then we seen price tap into it during London. I also did like how price swept out the previous day low, also Asia's low as well. So sell side liquidity was being swept going into the POI. I went down to the 1 minute time frame to try to find a 1 minute break of structure, but in this case, it was unreasonable for me to wait for a 1 minute break of structure. So I decided to try and use the internal structure ranges. So in this case, we have an internal high that made an internal low, and price made a new internal higher high. So at this point in time, let me go ahead and delete this to clear the chart up. I did consider this as a change of character as an internal high was broken. So from here, I decided to use this internal range from this internal low to this internal high. And then I went ahead and used this extreme order block. This is a sell to buy move on the 1 minute time frame, or also a rally based rally on the 2 minute time frame. Either one will be perfectly fine to use. On the 1 minute time frame, I seen price come into the POI, but not only did it come into the POI, it was compressing into the POI. Usually, if you see price compressing into a POI, this is a good sign that price will fly away from the POI. If you see price tap your POI and compress away from it, which actually I'll kind of break down here, that usually isn't a good sign that price is going to go in your direction. But either way, seeing price came into the extreme order block, tapped in here, gave the compression going into it as well. I went ahead and took a long position somewhere in this area with the stop loss underneath this low. And I believe I was shooting for this M5 high. This M5 high was a good liquidity area. Also, it gave about a 1 to 3 RR, something like that. So cool. Went down to the 1 minute time frame and we started to see price push away. In this case, I did point out that I was starting to see compression in the opposite direction, where price was compressing away from the POI, which is usually not a good sign that we want to see because usually if price pushes away in this fashion, price is going to want to run on lower. As price was pushing on higher, I was noticing that price was slightly taking out sell side liquidity here underneath this low. We had sell side liquidity even swept underneath this low, and then price taking out sell side liquidity underneath this low. So the good thing is one, I was already in the move and there was really nothing for me to do other than wait. But seeing that price was taking out sell side liquidity on the way up was a good sign or something that was working in my favor. And the good thing is price did continue to go on higher. Now, ultimately, I ended up putting my stop loss to break even because a couple things. One, price was already in profit for quite a bit. And also, I figured if price were to come down here, there was a ton of sell side liquidity that price could run and most likely would run. I also put myself in a break even position, and technically, my entry had to be somewhere like this because it barely did wick me out. And that makes a little more sense because that's where that 1 to 3 RR came into play. So, um, the other reason why I put my stop loss to break even, other than price being in profit and almost to my TP, is because you could make the argument relative to the 5 minute time frame that price could go bearish. If I was using this swing high to swing low, price is in bearish structure, and I think I utilized a 3 minute order block for the extreme order block. This last sell to buy move here, and sorry, the last buy to sell move, just like that, and price tapped into here. If somebody were to tell me that they were looking for shorts, I would completely understand why they were looking for shorts. But the main reason why I was looking for longs is because of the higher time frame bias. The higher time frame is always going to have a higher priority over the lower time frames. But there was a possibility that I could be wrong. So simply moving my stop loss at break even allows me to be risk free And if price goes on lower, so be it. I will live to trade another day. My analysis was wrong. But if price is simply giving an order block mitigation and wanting to still push on higher without making a new low, then I can still potentially be part of that move. Unfortunately, price literally came down to the tick, hit my break even, and then pushed on higher. So, unfortunately, it was a break even trade. But the good thing is, price did still play out in my direction. Price did continue to push on higher. The analysis was good. And also, I still was able to protect my capital and live to trade and see another day. Hopefully, that all makes sense. If you guys have any comments or questions, please let me know. Thank you for watching, and I will catch you in the next one.